thank all of you for joining me this afternoon. Do we have any shareholders out in the audience? How many of you are shareholders? Hey, there's one right there, Mr. Rick Rule. Excellent. He's a big shareholder. All right. All right, well, let's move along here. All right, the forward-looking statement. So EMX has a unique business model. We have a three-pronged approach to the royalty business model. The conventional royalty business model is simply to write big checks to acquire royalties. Although we do some of that, that is not the primary vehicle that we utilize to grow our royalty business and our royalty portfolio. We use what's called royalty generation, which is a takeoff on prospect generation. We go around the world and we acquire prospective mineral real estate, do some basic inexpensive explorations on that property until we find mineralization or signs of mineralization and enough of that to entice another company to come in and acquire the property. When they acquire that property, then we hold back a royalty on that property, and we also receive annual payments from them, milestone payments, in some cases, advance royalties. So long before it ever goes into production, we are garnering royalties from that. We also collect management fees on any property we manage the exploration on for our partners. So that's the primary vehicle that we utilize to grow our royalty portfolio on an organic basis. So since January of 2018, we have sold 83 properties around the globe, and on every one of those, we have held back a royalty on that. So we've created 83 royalties in 3.5 years. And we've been operating for almost 20 years now, but that's just a metric for the past 3.5 years simply. And then we also do engage in royalty acquisition when we can find royalties at favorable pricing valuations. But frankly, the landscape in the royalty acquisition space has become exceedingly competitive. So that's become difficult, but nonetheless, we do find value out there, typically through third-party acquisitions. And then the last prong of our business model is strategic investment. So if we find a company with a project in that company that we think is grossly under-recognized in the market, yet stands a substantial chance of producing a very outsized financial reward, we may invest into that company, lend them our geologic intellect and business acumen, and help them monetize that asset. A great example of that would be Malmish in Far East Russia, where we invested in a project that was back in 2011, and over 7 years we put about $13 million into that, and then helped to advance that project. That project was sold for $200 million, and that drops our portion of the reward there was $69 million US, or about $90 million Canadian into our treasury. And we have some other opportunities like that in our portfolio right now that we're advancing. You can tell a lot about a company by its ownership. Management, directors, and employees own about 12% of our shares, so we've got a lot of skin in the game. SSR Mining owns about 11.2% of us. Stevens Investment Management out of San Francisco owns about 10% of us, and that's run by Paul Stevens, and Paul Stevens is the guy who took Apple public. I don't think I have to say much more than that about Paul. Franco-Nevada owns about 6.1% of us. Of course, they're the biggest, most successful, shrewdest royalty company out there, and they've invested directly in us. Sprott, that's Sprott Inc. there, not to include Sprott discretionary clients, was probably another 15% or something like that. Newmont owns about 4.5% of us, then Adrian Day Asset Management, and then also Euro Pacific Capital and U.S. funds. Recent deals, I'll just go over these really quickly. EMX makes a strategic investment in premium nickel resource projects in Botswana. So we bought into premium nickel, who acquired some very favorable battery metals projects in Botswana. There was a very nice nickel mine there that was run by the government of Botswana. Of course, most governments don't do a very good job of running countries. Well, they do an even worse job of running mines, and they mine one into default, and the government of Botswana sold that off, but there's still a lot of resource there to be had, and nickel is a great metal to own right now, and we're going to be part of that. We have a very handsome royalty on the Caserones copper and molybdenum mine in Chile. We'll discuss that a little bit further down the line here. And then we also recently settled a long-standing lawsuit on an area of interest in Nevada with VRIC Gold, and that dropped almost $19 million into our treasury. And then in the past, as I said, since 2018, we've sold 83 projects, creating a royalty on each one along the way. Here's the Caserones NSR, or net smelter royalty. We have almost 0.75% on a giant and long-lived copper molybdenum mine. We expect this to produce about $8 million Canadian in cash flow for us this year. Moving on to the SSR royalty portfolio. This is a portfolio that we picked up about a year ago. The key one right there is Gedik Tepe, which means notched hill in Turkish. So that is a gold oxide cap with a polymetallic sulfide system lying underneath that. On the gold oxide cap, we have a 10%, 10 NSR on that. This is going to turn into a very handsome ATM for us, and this starts cash flowing for us, it looks like in June or July. They have to produce 10,000 ounces of gold first before our royalty kicks in. As of a month ago, they had produced about 4,000 ounces. So we think they will breach that 10,000 ounce threshold right around the end of June, early July. And then that thing is just going to gush millions of dollars a year for us. There will be huge cash flow for about 3 years. And then they will mine that out probably in about 5 years, and then they get into the sulfide polymetallic system underneath that, which is much more long-lived, and we have a 2% NSR on that. And then in the development stage is also Yenapazar, where we have a NPI, or net profit interest, and De La Blayos in Argentina. The Levo Mine, this is in Nevada. This is actually the Leeville royalty, which encompasses portions of the Leeville mine, the Turf mine, the Four Corners mine, the Carlin East mine, and Monarch. This would be cash flowing us this year somewhere around $2 million US, or about $2.6 million Canadian. And this is a very long-lived mine. You can see the Turf vent shaft there. That is a vent shaft that Newmont sank a few years ago and put into, commissioned into activity in late 2018. Newmont spent $1/3 billion US to put in that vent shaft. So you can imagine if Newmont spent $1/3 billion US on a vent shaft, which has no man cage on it and no production skip on the bottom, then they've got an awful lot of gold down there that they know that they can exploit and bring to the surface in order to amortize out that huge capex. That gives you some idea of the scale of the mineralization that they're going to realize below that. This is our Canadian royalty portfolio. We've got projects all over the world. We actually have 272 properties around the world. A lot of those are in Fennoscandia, primarily in Sweden and in Norway. A lot of them are in the western United States, primarily Arizona, Nevada, and Idaho. But then we have this very handsome portfolio of royalty properties in Canada also, and a lot of those are in the Red Lake district around Detour Lake Lake, and so on. So, and the Timmins District. So very important mining camps that we have royalty properties in also. Moving on to the Volumin Mine, this is a lead zinc silver property in Turkey. This is just going into production now. There's over 100,000 meters of drilling on our royalty property there, and they will be mining this thing for years. This, like I said, is just commencing commercial scale production on our side of the property this year, and this thing will turn into a multi-million-dollar ATM for us in the next several years. That will ramp up to $2, $3, $4, $5 million about 3 or 4 years out from now. So our cash flow is really building. We're going to go from cash flow negative this year to decidedly and substantially cash flow positive this year. And then later in the year, we look to implement a modest dividend. Now, the dividend is really just a vehicle to check a box to make us more available to institutional investment. And the way that works is a lot of pension funds and similar investment vehicles have stipulations in their operating bylaws that demand that they can only buy equities that provide a dividend. So we're just checking that box to open us up to institutional participation.